Welcome to the Deep Dive. Our mission today is to take a stack of sources and really unpack the latest twists and turns in the crypto market.
Yeah, we've got articles on, market trends, regulations, specific projects, plus some honestly fascinating insights from social media chatter too. Lots to cover.
Absolutely. The world of crypto is just buzzing right now, isn't it? From meme coins grabbing headlines to these major shifts in regulation and the tech itself.
It really is. Hard to keep up sometimes.
Exactly. So whether you're kind of new to this space or just trying to stay on top of the pace, we're going to try and pull out the most important bits, the key insights to help you feel, properly informed.
Sounds like a plan. It's complex, but definitely interesting signals out there.
Okay, then let's unpack this. Based on what we've seen in these sources, what's the overall state of the crypto market right now? What's the big picture telling us?
Well, the headline, I'd say, is definitely a significant market surge. The overall crypto market cap reached $2.66 trillion. That's pretty close to its 2021 record high.
Wow. Okay, so potentially retesting those previous peaks. But the sources mentioned some turbulence recently, a bit choppy.
Absolutely. There was definitely notable volatility earlier, back in Q1 2025. The sources specifically link this to the imposition of U.S. trade tariffs and just broader macroeconomic uncertainties that were creating ripples everywhere, really. But they also show, signs of stabilization starting to emerge now in Q2.
Okay, stabilization. And what are the sources pointing to as the main engines driving this current bull market push?
Two big factors really stand out in the material. First, the approval of spot Bitcoin ETFs by the SEC. That was back in January 2024.
Right, the ETFs. Okay, so for you listening, that basically lets investors get exposure to Bitcoin's price, but through traditional investment accounts, right? Like buying shares in a fund that actually holds the Bitcoin.
Exactly. It just removes a lot of the, let's say, technical hurdles, makes it way more accessible, not just for, individual retail investors, but crucially for wealth managers handling big portfolios, retirement funds, that sort of thing.
Yeah, that makes sense.
And we're seeing the big players step in. Sources highlight BlackRock. They've got over $15 billion in Bitcoin assets in their ETF now. Fidelity, $9 billion. This flow of, traditional capital is a huge driver.
So easier access through TradFi, that's one major piece. What was the second big catalyst mentioned?
The Bitcoin halving event. That happened in April 2024.
Ah, the halving, the quadrennial supply shock, yeah.
Precisely. So this is when the reward miners get for processing transactions, it gets cut in half automatically. It just fundamentally slows down the rate new Bitcoin enters the market.
And historically, that's been a bullish signal, hasn't it?
Very much so. While the immediate price effect can vary, historically, the 6 months after the previous two halvings saw really substantial gains. We're talking 51% after the 2016 one and 83% after 2020.
That historical context is pretty compelling. And what are the analysts in these sources saying about this latest halving?
Well, there was a survey mentioned, and it indicates nearly half, almost 50% of the analysts surveyed believe Bitcoin will actually surpass its previous all-time high within 6 months of this past April's halving.
Okay, that's a pretty strong indicator of market sentiment then. Let's look at Bitcoin's price journey according to the sources. Started 2024 around what, $44,000?
Yeah, around 44K. Then grew to nearly $70,000 by late May 24, and then it peaked quite remarkably at $106,140 in mid-December 2024.
Wow.
Before that Q1 2025 pullback we mentioned earlier.
Got it. And looking ahead, predictions.
Right. The analyst predictions included in the sources, they sort of cluster around $77,000 by the end of this year, 2024, and maybe $123,000 by the end of 2025. Some sources even predict a, potentially huge surge between 2025 and 2030.
So the takeaway seems to be, despite some recent bumps, the overall narrative is still strongly optimistic for Bitcoin, driven by those ETFs and the halving.
That's definitely the dominant narrative coming through, yes.
Okay, so beyond Bitcoin, the sources dig into some really fascinating specifics. Let's start with XRP. It always seems to generate a lot of buzz and speculation.
It absolutely does, and the sources reflect that. You see this incredibly wide range of price predictions for XRP, which honestly highlights just how speculative it is and how much community sentiment plays a role.
Right.
You've got analyst predictions based on hypothetical market caps hitting $750 billion or $1.5 trillion, even $3 trillion, leading to targets like 12.81 cents, $25.62, or $51.24 XRP.
And then you get the really wild stuff on social media, don't you? Like XRP matching the US M1 money supply, meaning millions per coin, Or just simple posts saying $10,000 and $28 soon?
Yes, exactly. Those are definitely out there at the, let's say, extreme end of the spectrum in the sources. More grounded observations noted back in May 2025 mentioned XRP being kind of stuck at $2.40 while Bitcoin moons, with a mix of signals, SETH and delays causing uncertainty, but also reports of large whale buys and CME futures activity sending kind of mixed messages.
Must have been frustrating for holders then. But is the prevailing narrative in some of these sources that a big move up is finally imminent?
That's the strong bullish case being made, yes. Sources point to technical analysis, talking about a bullish pennant breakout. They mention the potential positive impact of Ripple's own stablecoin, RLUSD, gaining traction. And crucially, this claim that the SEC drama is finally over as of May 2025.
Right.
So this combination, according to these particular sources, makes XRP primed for a massive 2025 rally.
Okay, but are there specific, concrete developments or partnerships mentioned that back that up, beyond just sentiment?
Yes, the sources do highlight several things. There were claims, for instance, of 3 major companies announced plans to buy and hold XRP as a strategic reserve asset. They name Alt Capital, putting in $10 million, and Weebus International with a $300 million commitment.
Okay, those are significant amounts, if true.
Definitely. They also mention Ripple's XRP ledger is apparently powering Hidden Roads trades, which they value at $3 trillion worth. That's a lot of volume potentially moving on the ledger.
That is substantial. And connecting this back to that RWA trend we'll talk more about later.
Exactly. A key development cited is the Dubai Land Department. They're launching a property tokenization platform, and it's specifically built on the XRP ledger.
Interesting.
Yeah. And this project is projected to reach a $16 billion scale by 2033. So that shows real-world adoption of the tech. And yeah, even in the more speculative social media sources, you find things like Trump's crypto shout-out in May 2025 being seen as positive for XRP, though the direct link there is maybe less clear.
Right. So it's a mix, isn't it? Tangible institutional use cases, potential partnerships, but also these ongoing, highly speculative market narratives and community beliefs. Are there any, underlying theories mentioned that try to explain this?
Some sources do touch on that. Theories like the price being already locked in because of future anticipated use, or the idea that whales and Wall Street are rigging the game and, accumulating before a big move.
The manipulation angle.
Yeah. And also the potential positive impact of things like the ISO 2022 messaging standard on XRP's utility in traditional finance. The real insight here, I think, is just how deeply intertwined community belief, perceived institutional moves, and even, conspiracy theories get in the whole discussion around XRP.
Okay, shifting gears a bit. Let's look at some newer, maybe less widely known projects highlighted. WhiteRock and its token, WhiteNet. What's the story there?
So WhiteRock, ticker White, describes a relatively new player, but one that's gaining traction. It's presented as having a pretty bold roadmap, aiming to bring tokenized finance solutions to mainstream users. It operates on its own decentralized blockchain.
Okay.
And the sources note its appeal particularly for investors maybe looking at lower market cap cryptos, the ones with potentially higher growth, but also obviously higher risk.
And what are the claims about its performance or potential so far? Anything specific?
Yeah, there are some strong claims. Things like WhiteRock has performed amazingly, or that it already hit the Bs, meaning billions in value or market cap. Sources also claim it's making PPL millions and call it a multi-billion-dollar project. Pretty bold statements.
Okay, so significant claimed impact already, and WhiteNet is the technical part, the gas token.
Yes, exactly. WhiteNet is the gas token for the WhiteRock blockchain. And the claimed tech specs for the network are, quite ambitious. They're talking 200,000 transactions per second, instant finality, and built-in capabilities for real-world asset tokenization.
200,000 TPS. Wow.
Yeah. And one particularly striking claim from a source was millionaires are cashing out of other assets, but they're holding this coin. Suggests a strong belief in its long-term potential among some people mentioned.
Interesting. Let's look at the actual market data the sources provided. This was as of late May 2025.
Correct. As of May 25, 2025, the sources reported WhiteNet trading around 0.0000708. Very low price point. It had about $3.87 million in 24-hour trading volume and a market cap around $460 million.
And the supply?
Right, big supply. 650 billion tokens circulating out of a maximum of 1 trillion. So the sources generally frame it as, promising yet volatile. They also mentioned something about a fair token launch, which included a 5% bonus link, probably to encourage early adoption.
Okay, so what about price predictions for WhiteNet? Understanding, of course, these are highly speculative for something so new.
Extremely speculative, yeah. For the short term, like the rest of 2025, analysts and the sources seem to expect a kind of mixed trend, an average maybe around 0.000033 in June, potentially creeping up slightly to 0.00000039 July through September, and then maybe a mild cool down in Q4, ranging between, say, 0.0000296 and swine 0.0000343.
So still fractions of a cent. And longer term.
Longer term projections are definitely more bullish, but heavily contingent on, actual adoption and ecosystem growth. For 2026, a potential high of 0.000 is mentioned.
Okay.
Then for 2027 and beyond, they talk about a range of the 0.000 to 0.00065s, with hopes maybe to surpass 0.00075 by 2030. Extreme bullish forecasts even mention 0.0 long stunts by then.
So what are the key factors that sources say will influence whether it gets anywhere near those targets?
Well, it's the usual suspects for new projects, but maybe even more critical here given that massive 1 trillion supply. Things like overall market sentiment, obviously, but crucially, the actual growth of its utility and the ecosystem being built. Does it attract users and developers?
Right. Demand is key with that supply.
Exactly. Those tokenomics, you need huge demand to absorb 1 trillion tokens. And of course, regulatory developments always play a role. The big insight, I think, is for a project like this, high supply, low initial price, that ecosystem growth and creating real demand are absolutely paramount if it's ever going to reach those higher price predictions.
Okay, another project that recently made some waves is Sophon, S-O-P-H. What's its niche?
Sophon is identified as a Layer 2 platform built using ZK Sync technology, and its focus is specifically on the blockchain entertainment sector. So think gaming, social platforms, maybe ticketing, that kind of thing.
And it just launched, right? Big event.
Yeah, key recent events were its token generation event, the TGE, on May 25th, 2025. That's when the SOPH token first became publicly tradable. And alongside that, they ran a massive airdrop campaign. They gave away $900 million worth of tokens.
Wow, $900 million airdrop. That's huge. Represents quite a chunk of the supply.
Yeah, 9% of the total supply distributed right at the start. And it has some notable backing, like from Binance Labs. It also apparently had early success raising capital through node sales before the launch, brought in $60 million that way.
Okay. What about the tech itself? How does it aim to bridge entertainment and blockchain?
Well, its approach is quite interesting. They're trying to make the blockchain part feel sort of invisible to the end user, which is key for mainstream adoption, right?
Definitely.
It uses something called Validium architecture. This allows for features like gasless transactions, so users don't necessarily have to pay fees for every little action.
Oh.
Also, native account abstraction, meaning you might be able to log in with, say, your Google account instead of needing a complex crypto wallet setup.
That would lower the barriers significantly.
Exactly. And it has elastic chain interoperability to connect with other networks. A really neat feature mentioned is its social oracle system using zkTLS. This apparently allows verifying user achievements or data from regular Web2 apps like your Spotify stats or gaming progress without actually exposing your private data on the blockchain.
Interesting privacy angle.
Yeah. One source summed it up nicely, calling it a potential consumer OS for Web3.
Okay, so ambitious tech. How did it actually perform right after the TGE just a few days ago? It sounds like it was volatile.
Extremely volatile, yeah. It debuted around 0.4566, peaked very quickly at 0.7942 downs, and then corrected sharply. Dropped over 42% from that high pretty fast.
Ouch. Any reason cited for that roller coaster?
The sources point to a couple of potential factors. One is just profit taking by those early node holders, finally able to sell after the token went live. The other big one is the anticipation of a significant token unlock.
The unlocks always create pressure.
Exactly. Apparently, 20% of the total supply, that's 2 billion SOPH tokens, is expected to unlock by August 2025. And the market knows that, so it often puts downward pressure on the price leading up to it.
Makes sense. Despite that initial volatility, did major exchanges list it quickly?
Yes. Remarkably quickly. It popped up on OKX, SLEX, MEXC, Gate.io almost immediately. And the exchanges often cited Sophon's potential for real-world utility in that entertainment space as their reason for listing.
Any incentives offered?
Yeah, some did. MEXC apparently had like a $90,000 prize pool for traders, and Gate.io enabled staking options for SOPH holders right away, trying to attract liquidity.
Okay. And what about the roadmap? What's next for SoFon, according to the sources?
The 2025 roadmap mentioned includes launching something called SoFon Home, expanding that ZK-TLS system to link more Web 2 data sources, and they've hinted at AI integration through partnerships. Names like Aether and MetaStreet were mentioned in that context.
So contrasting views from analysts. Short-term bearish versus long-term bullish.
Pretty much. Some analysts highlighted in the sources are bearish short-term, mainly because of that big token unlock coming in August. They expect selling pressure.
Right.
But others are more bullish on the long-term potential. One projection from Crypto Ticker mentioned 0.154 cents by the end of this year, 2025, while another saw it reaching 0.7100 hours by 2029.
Big difference.
Huge difference. But those long-term bullish forecasts are highly contingent on SoFon actually achieving mass adoption. Especially, can it bring in non-crypto natives from those huge gaming and social media markets it's targeting? That's the big question.
So the insight here is really about how critical user adoption is for these utility projects, especially when they face early tokenomics challenges like unlocks.
Absolutely spot on.
Okay, let's pivot to a trend that's just impossible to ignore right now.
Yeah.
The meme coin phenomenon. Feels like it's absolutely everywhere.
It is definitely an explosive resurgence. Yeah, the sources are full of it. A massive surge in meme coin activity, new projects raising millions, literally, in pre-sales, and even the established ones like DOGE and Shibe are seeing significant comebacks.
What did the numbers look like? Any market stats?
One source noted the global meme coin market cap surged 12.7% in a single day recently, and 24-hour trading volumes were exceeding $4.3 billion. That's serious money flowing into this space.
Wow. And what's really interesting, maybe even surprising, is the mention of institutional curiosity. Banks looking at this.
Yeah, that was highlighted. Reports suggesting major banks, even names like Goldman Sachs and UBS, are apparently evaluating meme coin-related products, which is quite a shift, isn't it, from being dismissed as just jokes to potentially something institutions need to understand or even offer.
Definitely a shift. And there's even regulatory movement in the U.S. specifically mentioning them.
Yes, that's right. A bipartisan proposal is apparently circulating in Congress. It seeks to classify certain meme coins as community assets.
Community assets, what's the implication there?
Well, the sources suggest this could potentially mean they're treated differently by regulators, maybe making them easier to list and trade on compliant exchanges down the line. It's still early days, but it's a notable development.
Okay. The sources also profiled a few specific upcoming meme coins, each trying a slightly different angle, it seems.
Yeah, quite a few. Let's see. Punisher coin, PUN, was one, Ethereum-based, raised over $30 in its first hour of presale. It's described as having a more, quote, strategic foundation.
Strategic how?
It has this Punisher energy thing targeting weaker meme projects, community missions with rewards, staking incentives, 22% of supply set aside for that a referral system. Sources mention insider buying, a deflationary burn model, and a target listing price of 0.045 cents. So trying to look more structured than just hype.
Okay, what else?
Then there's Mina Pepe. This one's AI-driven, raised over $10 million in presale. Its main thing is using AI agents for market insights, but you need to hold the token to get access. It also offered really high staking rewards, up to 219% APY, according to one report. The AI angle is the key differentiator.
AI meets memes. Interesting. Next.
Solaxi, SOLX. This one is positioned as a Layer 2 solution for Solana. Aiming to tackle Solana's congestion issues, it raised over $38 million in pre-sale. Promises faster transactions, lower fees, high APY staking, and even developer tools. So it's framing itself as having a technical purpose.
A utility meme coin on Solana L2. Okay, and one more.
Right, Pepe Unchained, also Ethereum-based. This one ties its value partly to Bitcoin hitting milestones, like $100 KBTC triggers rewards, uses a burn mechanism, raised a huge $73 million in pre-sale.
$73 million, wow.
Yeah. And crucially, it's apparently building its own dedicated Layer 2 blockchain specifically for meme coins, trying to create infrastructure for this niche. One prediction cited mentioned a potential 100x return post-launch. High hopes there.
So it seems the drivers behind this whole meme coin resurgence are a mix, right? Classic social media hype that make memes meaningful, again, idea.
Yeah, the virality factor is still huge.
Plus this new layer of institutional curiosity we mentioned, and critically, some projects are trying to add actual utility now. AI integration, Layer 2 solutions.
That's exactly the picture painted by the sources. It's not just hype anymore, for some of them at least. They're trying to build ecosystems or offer real features.
But, and this is a huge but, we absolutely have to balance this excitement with the risks, don't we? These things are notoriously volatile.
Without question. The sources are very clear on this. Meme coins are inherently high risk, highly volatile. They use PEP as an example. It dropped a massive 76% from its peak before it eventually bounced back. The reality is, many still lack long-term roadmaps and rely almost entirely on hype.
Yeah. So what's the outlook? Short-term versus long-term?
Short-term, the sources suggest if Bitcoin holds steady or keeps climbing, especially if it breaks $100, the meme coin market could get even more explosive, very sentiment-driven.
Yeah.
But for long-term survival, the thinking seems to be that projects will need sustainable ecosystems, like that AI integration in mind of Pepe, or the Layer 2 infrastructure from Solaxi and Pepe Unchained, something beyond just the meme.
So the takeaway is strong. Potential for big gains, but extreme risk. Diversification and careful risk management are absolutely essential if you're even thinking about touching this space.
Couldn't have said it better myself.
Okay, moving beyond specific coins and the meme frenzy, the sources also really dig into these broader trends shaping crypto's future. Regulation and policy come up again and again as huge factors.
They absolutely do. It's clear the regulatory landscape has a massive impact on prices globally, and any announcement from a government or regulator can cause sudden, sharp market shifts. It keeps everyone on their toes.
Especially in the US, it seems. The SEC features heavily.
Yes, the SEC is highlighted as the most active regulator there. Chairman Gary Gensler's view is noted he sees most crypto as unregistered securities, rife with fraud and manipulation, and he's been pushing hard for firms to register.
But the guidance isn't always clear, is it? That seems to be a common complaint.
That's definitely mentioned. While the SEC is actively enforcing existing laws, many in the industry feel the actual guidance on how to comply is still murky, creates uncertainty.
What about specific SEC enforcement actions mentioned recently?
The big ones cited are the lawsuits against Coinbase and Binance back in June 2023. Coinbase for allegedly being an unregistered exchange, broker, and clearing agency. Binance faced charges over mishandling customer funds, which led to that huge $4 billion fine later on.
Right.
And the sources mentioned the SEC sued 5 crypto companies in total during 2023, so definitely an increased focus.
And we're also seeing political action, both from the executive and legislative branches in the U.S.
Yes, quite a bit of activity there too. The sources mentioned former President Biden's push for that 30% tax on crypto mining. On the other side, the Trump administration, according to these sources, is prioritizing digital asset legislation, apparently planning to roll it out in phases for stablecoins, then broader market structure, and maybe even a Bitcoin strategic reserve bill.
A Bitcoin strategic reserve.
Oh.
And Senator Loomis's bill.
Yeah, Senator Cynthia Loomis reintroduced her Bitcoin Act. That would mandate the U.S. government actually buy 1 million Bitcoin over 5 years using Fed and Treasury funds, framed as budget neutral in the bill. And President Trump is reportedly fully supportive of that.
That would be a massive government purchase. What about stablecoins?
David Sachs, cited as Trump's chief crypto advisor, apparently expects the Genius Act, that's the stablecoin bill, to pass the Senate with bipartisan support. Noted it cleared a procedural vote in May. And the sources suggest some policymakers see stablecoins as a way to potentially bolster the U.S. dollar's global role, interestingly.
Okay, and there was also a recent specific clarification from the SEC staff on staking, wasn't there? That's been a gray area.
That's right, a potentially significant development on May 29th, 2025. The SEC's Division of Corporation Finance issued a public statement. It clarified their staff's view, important distinction. It's not a formal rule that certain types of protocol staking on proof-of-stake networks do not qualify as securities offerings under the Howey test.
Okay, so they're starting to draw lines. Which types are not securities in their view?
Yes. The statement specifically mentioned solo staking, running your own validator, direct staking where you keep control of your own keys even if using a third party, and custodial staking, but only where the custodian has no discretion over the staking process.
And what was explicitly excluded from that positive guidance?
Crucially, they said models like liquid staking, restaking, and any custodial staking where the custodian does have discretion. Those were not covered by this guidance and might still be considered securities.
So progress maybe, but still evolving?
Exactly. It provides some guidance, but it's just staff view, not legally binding, and it clearly leaves popular models like liquid staking in regulatory uncertainty. The landscape is definitely still shifting.
And how is all this U.S. focus impacting the rest of the world? Are companies looking elsewhere?
It seems so, yeah. Some companies, like Gemini, reportedly looking at the UAE, or Coinbase expanding in Bermuda, have cited U.S. regulatory uncertainty as a factor, but other places are moving forward too.
Like where?
Hong Kong passed a stablecoin bill and announced new licensing for over-the-counter trading desks. Pakistan set up a digital asset regulatory authority. The UK's FCA has its own stablecoin proposal out. Kazakhstan legalized crypto to fiat exchanges. Lots of movement globally.
And even at the state level in the U.S.
Yeah, Michigan lawmakers introduced bills, including one that would actually let public pension funds invest in Bitcoin ETFs. So action at multiple levels.
Got it. The sources also mentioned that legal challenge to Trump's tariffs. How does that fit in?
Right, the Liberation Day tariffs. A federal court ruled he overstepped his authority, but an appeal is filed. It's not directly crypto, but it highlights the broader political and economic context around trade policy, which can sometimes spill over and affect market sentiment or even how digital assets are viewed in trade disputes.
Okay, speaking of that broader economic context, how do things like interest rates and inflation play into the crypto market, according to the sources?
They definitely interact. Global financial conditions, interest rate expectations, inflation trends, even geopolitical events, they all influence crypto prices. Sometimes digital currencies get positioned as an alternate asset, maybe a hedge during instability or trade tensions like those tariff situations.
So when traditional markets are shaky, some money might flow into crypto.
Potentially, yeah. The sources included recent comments from central bankers, like at the Fed and the ECB. They were giving kind of mixed signals on when rate cuts might happen, maybe expecting inflation to stick around longer, and talking about how tariff policies are impacting economic activity overall.
And those macro signals affect crypto too.
Absolutely. They influence overall investor risk appetite. When investors feel cautious, they might pull back from riskier assets like crypto. When they feel bullish, more money might flow in.
Yeah.
We also saw ripples in traditional markets like government bond yields sliding after that court ruling against the global tariffs in late May. It's all interconnected.
Okay, one trend that seems to be getting a lot of institutional traction is real-world asset tokenization, RWA. Can you break that down?
Sure. RWA tokenization is basically creating a digital representation, a token, of a physical or traditional financial asset on a blockchain.
So like tokenizing a building or a stock.
Exactly. Real estate, art, bonds, intellectual property, commodities, you name it. You create a token that represents ownership or a claim on that underlying asset.
And what are the supposed benefits of doing this? Why bother?
The main benefits highlighted are things like automation. You can use smart contracts to handle dividends, interest payments, etc. Better traceability of ownership. Fractional ownership, this is a big one. It could let people own a small piece of something really expensive, like a skyscraper or a famous painting.
Making illiquid assets more accessible.
Precisely.
Yeah.
Which leads to potentially increased liquidity for assets that are traditionally hard to buy and sell quickly.
Are institutions actually doing this now? Or is it still theoretical?
Oh, they're definitely moving. Sources point to BlackRock launching its tokenized asset fund, BUIDL, on the Ethereum blockchain in 2024. And apparently it raised $240 million in its first week. That's serious interest.
Wow, yeah.
Citigroup is also testing tokenizing financial assets on a private blockchain. They're aiming for things like 247 transfers and faster settlement compared to the old systems.
And the market predictions for this RWA sector, are they big?
They are pretty huge, yeah. The market was valued around $2.8 billion in 2023, but analysts predict it could hit nearly $10 billion by 2030. That's almost 20% growth per year.
Okay.
And Boston Consulting Group analysts, they're even more optimistic. They predict up to $16 trillion worth of assets could be tokenized by 2030.
16 trillion. That's massive.
It represents potentially 10% of global GDP by then. And this connects right back to that Dubai Land Department project using the XRP ledger for property tokenization. It shows this isn't just a future dream. It's happening now with potentially enormous scale.
Okay, related but different. Central bank digital currencies, CBDCs. What's the global picture on those?
Right. So CBDCs are centralized digital currencies issued and managed directly by a country's central bank. Very different from decentralized crypto like Bitcoin. The idea is to maybe get some digital currency benefits like faster payments, but without the volatility or, the lack of central control.
And how widespread is this? Are countries actually doing it?
It's incredibly widespread in terms of exploration. The sources say 132 countries, representing 98% of world GDP, are developing or testing CBDCs.
98%, wow. Are any actually live yet?
Yes, they're already operational in places like Jamaica, Nigeria, the Bahamas, and China has the biggest live trial by far with its eCNY. Apparently 260 million wallets are using it across 25 cities already.
Okay. What are the predictions for the future?
The Bank of International Settlements, the BIS, they predict that by 2030, we could see maybe 15 retail CBDCs, ones for the general public, and 9 wholesale CBDCs for interbank transactions operational globally.
And even SWIFT is getting involved.
Yeah, SWIFT, the big interbank messaging network, plans to launch its own network connecting these different CBDC platforms in the next year or two. The goal is to make cross-border CBDC use easier using existing bank infrastructure.
Okay, so lots of global activity. What about the U.S. stance on a CBDC?
The Federal Reserve has been pretty clear. It has no current plans to develop a U.S. CBDC. And any move in that direction would need specific approval from Congress anyway.
Why the hesitation? Any concerns mentioned?
Yes, sources cite significant concerns. From consumers, it's mainly about privacy worries about government surveillance of transactions. From banks, it's concerns about the impact on their deposit base, potential effects on credit creation, and maybe even risks to overall financial system stability if people shifted money en masse from commercial banks to a central bank digital dollar.
We touched on AI earlier with some meme coins and so on, but the courts has also talked about the broader intersection of AI and crypto, right?
Yes, it's definitely a rising trend. AI is working its way into the crypto space rapidly. You see this specifically through the growth of AI-focused tokens. These are usually tied to ventures building AI applications on blockchains or decentralized machine learning platforms, that kind of thing.
And is this sector growing fast?
Incredibly fast. The sources note the total market value of these AI tokens surpassed $39 billion recently. That's up from just $2.7 billion back in April 2023. Massive growth.
And what do these tokens actually do?
Typically, they function as payment for using AI services or accessing data on a network. They can also be used as rewards for contributing computing power or data, or for governance rights, letting holders vote on the future direction of these decentralized AI projects.
Any specific examples mentioned?
A key one highlighted is Fetch.ai, FET, and its planned merger with SingularityNet and Ocean Protocol. They're planning to combine into a new token called ASI for artificial superintelligence.
ASI. Ambitious name.
Very. And their stated goal, according to the sources, is to advance decentralized AI as a potential alternative to the current dominance of big tech in the AI field. So it shows how this trend is not just creating new tokens, but also new collaborations and strategic directions within crypto.
Okay, switching to a more challenging topic.
Yeah.
The climate impact of crypto mining. This remains a big concern, doesn't it?
It absolutely does, especially for proof-of-work blockchains like Bitcoin. The energy and water intensity is a major issue highlighted in the sources.
What kind of numbers are we talking about?
The stats cited are pretty stark. Bitcoin mining alone is estimated to use around 1,174 terawatt hours of electricity per year. That's more than the entire country of the Netherlands uses.
Wow.
And a single Bitcoin transaction. Its energy footprint is equivalent to what an average U.S. household uses in almost 26 days. Plus, about 2/3 of that energy apparently still comes from fossil fuels.
So significant carbon emissions.
Yeah, raising concerns it could actually hinder efforts to meet Paris Agreement climate goals. And it's not just energy. Water consumption is also huge. Potentially over 2,200 gigaliters a year, comparable to a major city like Washington, D.C.
Are there efforts within crypto to fix this? Or at least mitigate it?
Yes, definitely. The most notable example is Ethereum's merge back in 2022. They switched from proof of work to proof of stake.
And that helped.
Massively. It's estimated to have cut Ethereum's energy consumption by about 99%. Huge reduction. But the sources also note that Bitcoin's core design makes a similar switch very unlikely.
Right. And this energy issue also has business implications for the miners themselves.
Absolutely. That high energy cost has led to big publicly traded mining firms becoming major players. Sources note their stock values surged dramatically. Marathon Digital up 590%, CleanSpark up 440%, Riot Platforms up 350% in the period discussed.
So consolidation is happening.
Yes, the prediction is that smaller, less efficient miners will increasingly get acquired by these giants who have better access to cheap power and economies of scale. They mention deals like CleanSpark buying assets for nearly $20 million and the big merger between Hut 8 and US Bitcoin Corp. The insight is that the environmental cost is actually driving significant business consolidation in the mining sector.
The sources also included some important reminders about just basic security risks, didn't they?
Yes, absolutely crucial. Security remains a constant concern. They use the example of the Osiris malicious browser extension.
What did that do?
It's malware that sneakily replaces legitimate download links for crypto software or wallets with malicious versions. If you download and install the fake one, it can steal your private keys or seed phrases, leading to loss of your funds, or even hijack your accounts.
Nasty stuff.
Definitely. The strong advice from the sources is just to be extremely cautious about downloading unknown programs or browser extensions, especially if they're recommended by strangers online or pop up unexpectedly. Basic security hygiene is critical.
Okay, finally, just looking at the overall investment climate, what do the sources say about funding activity? Are VCs putting money back into crypto?
It seems like investor confidence is returning, yeah. Sources noted a significant uptick. $1.9 billion was invested in crypto companies in Q4 of 2023. And then in February 2024, VC funding for blockchain startups hit $485 million, which was a 3-month high at the time.
So money is flowing back in. Where is it expected to go?
The expectation, according to these sources, is that future funding will increasingly target projects building real-world blockchain applications and core infrastructure. Less focus perhaps on purely speculative tokens, more on things with tangible use cases.
Makes sense. And mergers and acquisitions, besides the mining sector.
Yeah, M&A is expected generally as the industry matures. We mentioned the mining consolidation. They also highlighted a big investment, $225 million, into Wormhole.
What does Wormhole do?
They work on cross-chain connectivity technology that lets different blockchains talk to each other. So that big investment signals strong investor interest in the foundational tech that enables interoperability across the crypto ecosystem.
Right, we have covered a ton of ground in this deep dive. Wow, from those big macroeconomic drivers like ETFs and the halving pushing the market up, through the really complex and shifting regulatory picture, both globally and here in the US.
Yeah, and then diving into specific projects, the ongoing drama and potential around XRP, the high hopes and high supply of WhiteRock, the launch volatility and mainstream aims of Sofon.
And that explosive resurgence of meme coins trying to add utility now, it's a lot.
It really is. What's clear from all these sources is that the crypto market isn't just one thing, is it? It's this fascinating kind of messy intersection of cutting-edge tech, traditional finance, trying to figure it out, unique online communities, and these constantly evolving, sometimes conflicting regulatory rules.
Understanding how all those pieces fit together, or maybe don't fit together sometimes, seems absolutely key to navigating this whole space.
Couldn't agree more.
Okay, so here's where it gets really interesting, I think. We're seeing this clear push towards integrating crypto with traditional finance, right? Through things like real-world asset tokenization, maybe even CBDCs down the line. That's one path.
The path towards more centralized control and integration, yeah.
But then, on the other hand, you've still got all this incredible energy, innovation, sometimes chaos, around decentralized projects, meme coins finding new life, new layer twos pushing the tech boundaries.
The decentralized innovation path.
Exactly. So, thinking about the future of digital finance, based on everything we've just discussed, what do you, listening right now, think ultimately wins out? Is it that path towards centralized control and fitting into the existing systems? Or is it the drive for decentralized innovation and maybe disrupting those systems entirely? Something to think about.